Hey everybody, it's Eddie Z here. Today I'm hanging out with a guy who's quietly pulling weekly rent checks out of the market while most traders are still chasing lotto tickets. I'm talking about Anmol Singh from LiveTraders.com. He's a former prop firm trader who went from broke college kid in London to managing 8 figures in trading capital and is now running a community of traders who actually know what a trading plan is. In this episode, we get into his Tesla rental property strategy, covered calls, cash secured puts done the right way, plus how he structures income, swing trades, and long-term investing so the market literally sends him a paycheck every single week. We dig into things called expectancy, win rate, arm multiples, drawdowns, and psychology. And he breaks down why most traders blow up, not because of their strategy, but because they refuse to think like a casino. So if you're serious about turning trading into an actual business instead of an emotional hobby, you're going to love this one. Hit play, and here's my conversation with the guy behind LiveTraders.com, Anmol Singh.
Hey everybody, I am here with Anmol Singh from Live Traders. Thank you so much for coming out today. Super appreciate it. I am super curious about your trading strategies. I know you have a pretty good following online. But before we get into that, I really want to learn more about you, specifically how you got into trading. What was the journey for you? What was the thing that got you into trading?
Oh gosh, the thing you're hitting right home to heart. So, for me, it started off in college. So I was, went to London in my university dorm room, and there was a time where you had to apply for, different internships because a part of my degree was you have to have 1 year of work experience before you can graduate. So that was the time they told us, right when we came into university, start applying for internships and jobs now. So you have something secured for year 2, year 3. And I saw all my friends, getting great jobs, great internships. And I just, for whatever reason, wasn't able to get like a single callback, applied from all the best companies all the way to the worst ones. And there was nothing there. I couldn't find anything. So I had a whole year to do something because everybody else got great internships and jobs. And I was one of the ones that didn't get anything. So naturally at that point, being like an introvert, you're sitting in your computer, you're figuring out, okay, what can I do? What can I do from home? And one of my friends, the guys in college, he came up to me. He's like, do you notice how there's like a club or society for everything you are interested in? Like if you're an entrepreneur, there's an entrepreneurs club that meets up every week. There's a football club. There's a this club, that club. There's no such thing as a trading or investing club in college. And we're like, but we don't know anything. What are we going to talk about? They're like, why don't we just all meet up, whoever's interested, and just talk about a book we read, or maybe we watch something on CNB so we can all learn together. That's how we started that club, just starting with 3 guys, grew up to like 10, 20, 30. And now, 10, 15 years later, it's a thriving club in college with hundreds of members. And we started that where we just meet up once a week and talk about the markets and try to learn together. And then I caught, bit by the bug. We call it, you bit by the trading bug, you get like hooked to it. And it just made me more and more curious on learning how to do that. And at that time, I would just write a blog on my research and what I was looking at, what I was thinking. And then Yahoo Finance and Motley Fool, those companies contacted like, hey, we love your research. I'm like, hey, just to let you know, I'm just a college student. Like, I'm not an analyst or anything, but if you like it, I'm happy to write for you. So they, basically funded my trading account. I used to write articles for them, and they would put, some other person's name, like a hedge fund guy. But no, I wrote it for them. I was a ghostwriter.
Oh, wow.
Yeah. So wrote those articles, got into that. And then I applied for a prop firm, which finally accepted me. This was in the White Plains in New York. But I would trade remotely for them. So I worked my way in the company, starting with a demo account, then, 50,000, 100,000, worked all the way till I was trading $10 million of their capital and for a profit split. So I did that all like from my university college degree. And
wow.
And
now, did they teach you how to trade?
Yes. So a lot of the stuff is what I learned from the firm, all the technical analysis, the risk management, how to build a business plan and trading plan, how to pay yourself, how to do withdrawals, because those are things that a lot of people even today don't talk about. Everybody wants to teach chart patterns. I'm like, okay, how do you pay yourself? How do you run a business? Because if you have bills, the bills are due monthly. Like you can't hope for a trade to work next year or hold on to a stock. It might, but we have to make a living. So the prop firm really taught me a lot of those things. And that's how I got into coaching as well. Is basically teaching all their newer hires that would come in and I would be responsible for coaching them.
So was there one guy there that you really grabbed onto, who you would call your mentor?
Yeah. So that guy was Jared Wesley, who was my business partner for Live Traders. So he was my mentor. He taught me. I paid a good amount of money for coaching under him, and he took me under his wing. And I really liked him.
Was he at the prop firm?
Yeah, he was also trading at the
Oh,
props
okay.
firm. So that's when he called me. He's like, "Hey, we're a little bit short staffed." They used to run their live streams as well for the members of the prop firm. It would be a live stream for all the remote traders. And they're like, "Hey, we're a little
Right.
bit short staffed. This guy's on site, so we need somebody to do the live streams remotely. Would you be open to doing it? Because you're doing really well with the program." So I started doing the coaching and stuff for internal inside of the company. And that's how I got into coaching, because the CEO was like, a lot of people are stuck at this level. They learn how to make like few $1,000s, but they're not getting there. So they're like, "Hey,
Mhm.
you crossed those levels in like 7 months. Why don't you come in and coach all the new people we're hiring on how to progress down the levels in the company?" That's how the coaching stuff started on as well.
Interesting. Interesting. Okay. So how long were you there for?
I was there for all the way from 2010 till 2015, so 5 years under the company. And then in
Mhm.
2015, they got bought out. And then that's when I called up my mentor. I was like, "Hey, what are you doing? Are you joining the new company? I don't know anything about him. It's going to be completely different." So I said, "I'm already doing pretty well. So I don't need to give them a percentage anymore." Because in the
Right.
beginning, I needed it. I didn't have any money as a college student. But now that I
Right.
saved up enough money to open my own trading account, I was like, "I don't think it makes sense to give 30% away. So why don't I just go off on my own?" And he's like, "You know what? I'm going to do the same thing. Why don't you and I start together?" And being a younger guy, and he's much older than I am, I said, "Let me handle all the business side of things, the online stuff, and you focus on training all the people in terms of the courses and all of that." So he created all of that, and I would manage the business side and doing the live streams and trading.
Okay. All right. Oh, but you're doing the live streams.
Yeah, I do them now every day, Monday to
Okay.
Friday. Just this morning, we hopped off at 11, from 9 to 11. For a couple hours, I stream myself trading. And
And that's on YouTube?
no, that's on our website. It's a members,
Oh,
yeah,
okay. You
members.
have to be a member.
Yeah, it's a member thing. Sometimes we'll do it occasionally on YouTube, or we'll do like a free day where everybody can just come in and log in. But just to
Right.
minimize that kind of noise of free,
Sure.
we keep it
Okay.
member only.
So what markets are you trading?
So we're trading US stocks and options. That's pretty much it. Like in the past,
Oh, options also.
yeah,
Okay.
options as well. Options, there's two styles to that. So one of them would be scalping, just for day trading. So we're
Mhm.
scalping 2 to 3 trades a day. With options, you're looking for very small pockets of moves. And then we'll swing trade options too. And then we do covered calls on our long-term positions as well.
Let's talk about your strategy. So you're doing stocks.
Mhm.
Is there one specific strategy or two specific strategies or a couple specific strategies that these are the ones that work for you, and this is the one that is your favorite? What's your favorite strategy?
Yeah, I don't really have a favorite. I have like a few different ways I've divided my trading into. So one of them is the income producing style, right? Income producing style would be me day trading stocks and options every day. The goal of that style is to make an income to pay my bills, right? And then we'll do swing trading with stocks and options, which we're going to hold for a few days, few weeks. And then we'll have a long-term portfolio for long-term positions. And then every Friday and Monday, we'll do the option wheel strategy, pretty common strategy for covered calls. So mostly on Tesla. So we'll hold Tesla stock. We'll sell covered calls against it every week, every Monday, so to collect premium every Friday, and then we'll rinse and repeat that strategy. And if it gets called away, we'll flip it. Now we'll start selling cash secured puts, and we'll just keep collecting that weekly paycheck until one day it drops. We get assigned the stock, and then we flip it again. We start doing covered calls on that stock. So that
Okay.
strategy is like a bread and butter that we don't necessarily take losses if you're okay holding the stock. And that's something that, as long as the stock doesn't get crushed, like it becomes like a Zoom or PayPal, that's a really good strategy to do. And that's like a weekly paycheck. Every Friday it comes in, and that's like an income producing style to live off. And then from day trading, it's mostly very,
Well, wait. Before we get to that,
yeah.
I'm curious about the option strategy because I interviewed a guy who just does weekly income for options, and what you're doing is not that different.
No,
So
no,
you do
no.
So you're doing it's weekly income. So you're doing cash secured puts, um, never using margin because that's what cash secured means. It means
Yes.
you have all the cash.
Right.
How much of your cash do you put at risk for that portion of your portfolio?
Yeah, so that would differ every week, but I keep my accounts separate, so not all the activity is gonna happen
Okay.
like
Yeah.
one account, to ignore the, calculations if you're in a swing and a day trade. So day trading
Sure.
account will be separate. For covered calls, at the moment, I'm doing it with 1,000 shares of Tesla, right? And I'll sell, 10 contracts against it. That's kind of it's the same. The size doesn't change. It's the same. I'm good with that. So
Okay.
so that would
So you have over 400 grand in your account
yeah,
right
I have
now.
like in my long term, I
Covered.
have 10,000 shares of Tesla right now in my long-term account.
Oh my God.
Yeah.
That's a lot of money.
Yeah, so, luckily I got it when it was like 100 something dollars a share, and that I'm not selling, but I'll sell covered calls on them too. So yeah, you would need to have the money to buy the shares. So majority of the people who are brand new, they would start with 100 shares of Tesla because you have to have 100
Okay.
shares to do at least one contract.
Right. Okay. Does it, I know, well, you happen to have a lot of Tesla. Obviously, it must be one of your favorite stocks, if not your all-time favorite.
Yeah. Yeah.
You've obviously made a lot of money in it. Any other stocks that would feel like they're the right stock to do that with? Because, I mean, look, Tesla was up around what, 450? It was very close to an all-time high
Yeah.
6-8 weeks ago,
Mhm.
roughly. I mean, it looked like a gigantic cup and handle. I trade cup and handles
Nice.
on a weekly chart, and then the handle broke down and it dropped over 100 points.
Yeah.
So that's tough, man. You could get, if you have a cash secured put, you most likely got put to stock at that point.
Yeah. Oh, it happens all the time. It happened to me a couple of weeks ago. I had sold the 415 cash secured put, and then Tesla dropped to 380. This was, I think, last month. So at the moment, you had unrealized P&Ls. The way I coach people is to think about it as like a rental property, right? So you're not going to look at the price of your rental property every day. Is it going up or down? That's the property. As long as the income is coming in, as long as even if, let's say, Tesla drops,
Oh.
I have an unrealized loss on my rental property. But if the rent is coming in every week, eventually, after a month, I lower my average cost on that stock. So if I collect $2 a week in premium, at the end of the month, I've covered a good amount of margin. I've covered $10 on that stock just by doing covered calls. So that lowers my average cost on the stock by $10. And then, sure, maybe there's a little bit of a time where we're down for a little bit, but if we keep doing it every week, and then if Tesla reverses back up or we've collected enough premium, our average will eventually match kind of the stock price in a long enough time frame. So I always tell people only do this strategy on stuff that you don't mind getting stuck in, the stuff that you don't mind holding, right? Like, so you don't want to do it on a circle or a stock that's clearly downtrending, number one. And you don't want to do it on a stock that is, let's say, MicroStrategy, or even though that gave a good amount of premium. But if the stock,
Coinbase, for example, Coinbase, that's a tough
yeah,
one. I mean, it stocks all over the place.
yeah. So I would stick to doing this strategy only on like the stocks that I know that even 10 years from now, they're going to be around. Like you could do it on Apple, Google, Microsoft. So if I end up holding it for 5 months, totally cool. Like I'm okay doing that.
Interesting.
Yeah.
Interesting. Now, what about on the other side? So if you're selling calls against a stock, now typically I happen to have an account that I manage that has thousands of shares of Google, thousands of shares of Meta, and thousands of shares of Amazon, and I sell calls
Yeah.
against those positions. And what I've been doing, I'm asking for your opinion. So what I've been doing is I've been selling calls that have a delta of around 0.10 to 0.12, something like that, about a week out, sometimes 10 days out. And most of the time I don't get called away. But Google recently, I got really close to getting called away. The thing went bananas. And obviously I took a loss on that. I mean, I made it up in the stock. Well, I can't complain about that. But if you do get called away, what do you do then? Because then you have a tax liability.
Yeah, so that's why you want to be careful of, like, if you're doing it on a long-term portfolio, right? Where your intention is to not actually get called away, just to hold it, then you ideally don't want to do it on the entire position. You're going to do it on a certain amount of position to begin with, but then technicals also are a key factor in that. So like one of my rules is I will never sell a covered call on a down day because I'm already taking in less premium. So I always try to sell when the stock is, let's say, up 4 days in a row now. Okay, now I'm going to sell a call even higher so that even if it has next 3-4 days of pullback, potentially the option's already given 50% of the premium. So then you have a choice of you don't have to hold it all the way till expiration. If
Right.
the calls already drop 50%, maybe I cover it and then the stock goes back up and then I'll sell it again a few days higher. So that's where technical is very important in that. Like if stock's down 3-4 days in a row, don't sell the covered call. Wait for a bounce and then sell it on a bounce date. And I'm doing weekly options. So I'll do every week because I think to sell a covered call for the next month, a lot can happen in the next month. So it could very
Right.
easily get called away. So I'll do weekly. For example, on Tesla right now, I think I'm in $415 cash secured put that I sold this Monday.
And what's the price right now?
Right.
We don't know when people are watching this, but
Yeah.
just to give
So
us
Tesla at the
some
moment is at $446. I had sold this call
Okay.
on Monday when it was about the same price. And I sold a 415 covered call that'll expire this Friday. So then as long as Tesla is above 415 this Friday, then I'll collect $2 or something in premium.
You mean a secured put?
Yeah.
Secured put.
So then,
Okay.
yeah, that's correct. So then I'll get roughly $2 a contract. So on 10 contracts, I'll get $2,000. That becomes like your, weekly paycheck on that. So I look for less aggressive, and I'll take $1 to $2 premium. I don't try to get higher premium because then you are much likelihood that it's going to call away or you're going to get a sign on the way down. So I would do look for $1 to $2 premium only. So for Tesla,
Okay. What about less than that, like 60, 80 cents?
that I'll only do on stuff like, I have some PayPal or Circle that are not moving right now. So on those,
Okay.
they're not going to give you $1, $2 premium for a week option. So for them, I'll
Okay.
have to take 50 cents or 30 cents. But on Tesla, my rule is minimum is $1. I don't sell a covered call under $1. But I try to get.
Oh, you're not looking at Delta?
No, not necessarily, because I'm only looking at the chart and saying, okay, where do I think it doesn't go this week, right? So really,
That's a tough call, though. That's a tough call.
Yeah,
I mean, I look at Google, like I'm watching Google, and I'm like, I don't know where this thing's going to stop.
right. Yeah, but in this case, I'm doing it on my trading account, so I'm comfortable with paying the taxes. But
Right.
if let's say Tesla drops, FOMC happens today, Tesla drops 415, let's say I get assigned.
Right.
As soon as I
Right.
get assigned, number one, I already collected that cash secured put premium, right? Then I get assigned, and now I have a stock. I'll flip it and I'll start repeating covered calls again on that. So the weekly paycheck is never going to go away. It's just that when you buy or
Love
sell the
that.
stock, you'll have to pay the capital
I
gain.
love that. So you like, it almost doesn't matter to you if it gets called away or not.
No, because I was going to hold it anyway. So that's why I say only do it on stuff that you are actually want to hold long term.
Okay.
Yeah.
Okay. Okay. But in your income specific account, you obviously got to love the stock and be okay holding it, but you're going to keep selling calls or you're going to keep doing secured puts on it,
Yeah.
selling secured puts
Right. Exactly.
forever, for as long as you
Pretty
can.
Yeah, I'm going to keep doing it
Right.
forever until something changes in the chart, like the chart start downtrending, or if it's not a stock that I want to hold anymore, I won't do it on. But the constant is that's why rental property is a great analogy for us.
Yeah, I love that. I love
Yeah.
that. When you said it, I'm like, yeah, because I've done very well in real estate. I'm
Right.
very fortunate, and I think most people have, for the most part.
Yeah.
It's gone up. But the thing that's always drive me nuts about it is that you can't point and click and sell. Like if you need to get out of it, there's no I'm okay, market's open, I'm out. That's the most annoying thing. And so, which has probably stopped me from making some even much bigger purchases in real estate.
Yeah.
It's just one of those things.
Yep.
Like right now, it's difficult to sell property. I mean, the
Right.
prices are still much higher than they were 5 years ago, which is surprising. You would think that prices would start to come down. I mean, if the economy turns to crap from here, that could still happen, and they have come down a little. But that's always been my biggest complaint with real estate. So that analogy makes perfect sense to me. Think of it as rental property or real estate investment. You're not going to point and click and sell it, but if you get that income
Right.
every week. Now, are you looking for a certain percentage of income based on the value of that property?
So that's a great question. I think in a way I am, but I'm not really looking at it like in the moment. Like I'm looking for, okay, like you own the property and the tenant is paying you a fixed rent. So let's say Tesla's going to pay me a fixed $2,000 a week, right? So as long as I'm getting that, I'll keep doing that, right, over and over again. So it's basically like I literally look at it as like a property. As long as the rent is coming in every week, then it doesn't matter. But the percentage is going to change. So if now Tesla shoots up to 700, okay, then I don't want to just get $1. Then I might try to get $3 or $5, right? So I guess it'll change in that ratio, the percentages. So when Tesla was $200 a share, we were actually still collecting the same dollar premium, and now it's at 400. We're still collecting the same $1 to $2 premium. Some weeks we can get 400 or 500 if you catch it on a good day. So I guess the percentage is roughly the same, but it has dropped a little bit. The higher the stock goes, the percentage will go down. But then that's
Interesting.
same thing as a property, where your property
So
value
wouldn't
is
you be
going up.
better off looking to do this in lower price stocks?
I haven't done it, so hard for me to really give you
Okay.
an educated decision on lower price stocks. I like because lower
Not lower price under $10, just lower than Tesla. Like,
yeah, but I think then the premium
Yeah.
is you're gonna get is I guess in percentage terms is gonna be the same, but the option is gonna give you 5 cents, 10 cents in premium.
I guess it depends on the volatility.
Yeah. But I like to, but then those stocks I might not be comfortable holding it. That might be like you're owning a property in inner city in Chicago or somewhere. So I don't.
Okay, what about, here's a question. So would you do it? So there's that Tesla 2 times ETF.
Yeah, I would not.
Would
do
you
it on
do it on that?
No,
No.
I
Okay.
never want to hold any leverage ETFs because the way they're created, they're naturally in the long run. If you look at the monthly chart, they're
Yes. You know why? Because you're essentially you're playing options on options. 'Cause that's
yeah,
what they are. 'Cause
yeah,
they're all derivatives. They're all options.
yeah,
Well, okay. What about on the S&P 500 or the Nasdaq 100?
absolutely. I personally don't do them, but I think that's a viable strategy because those things are great rental properties. They're blue chip, in a way, they're New York City properties. They're not really going to appreciate that much. They're not going to depreciate that much either, but it's going to be consistent income. So,
Right.
so I think SPY, QQQ, you could do it on Tesla, Microsoft, Google, Amazon. You could do it on, and even Nvidia, you could do it on. You could do it on Boeing, UPS, FedEx, like stuff that is. I like to do it on stocks over $100 typically, because then you can get that
Okay.
premium. And I would do it on like companies that everybody knows. And the only question is it going to be around 5 years from now? Assuming if it enters a downtrend and I'm stuck in the stock, am I good holding it? Then
Right.
those kind of the basic criteria that I use.
Makes sense. I love it. I love it. I think I've been leaning towards doing that more and more myself in my own accounts. So, I mean, I'm strictly a day trader.
Mm.
Um, and then I have some very conservative investments also,
Right.
but they're boring and they don't pay much.
Yeah, and I think that's
Municipal
the
bond.
natural
I have a
progression.
buttload of municipal bonds,
Mm.
tax-free bonds, but I mean, and I'm a trader. It kind of
Yeah.
doesn't make sense. But there's like, so what you're saying is, I know for me, like I have my risk. I might sound silly. I'm risk adverse, which is why by the end of the day, I almost never hold a stock. I have a couple stocks I swing trade,
Mhm.
like the one I gave you the other day.
Yeah.
And then I'm mostly out by the end of the day.
Right.
And that's for, so that's the risk adverse day trader, right? You don't have to be a big risk taker if you know you're going to be out at the end of the day.
Right.
And then, but then on the other side, I'm not a great at holding long term. It just,
Mm.
and I was a stockbroker for 17 years, and all I've ever done is watch the markets
Right.
since I'm a kid. It's pretty interesting.
Yeah. I'm
how
with
that
you on
is.
that. I feel the
Interesting.
same way. Like I am much better on, day trading and then swing trading, which swing traders will typically be in it for less than 2 weeks. That is kind of my comfort zone. Long term for me has also been very hard because I look at the chart too much and I see it's extended. I want to sell it.
Right.
You break the, then it's not a long term investment.
Plus, I mean, the gain you have in Tesla is like insane.
Yeah.
So,
So the only way I'm able to do that is like I take a percentage off, let's say from my day trades and swing trades, and I don't look at that account. Like that's just in there. I don't log into that a separate account, separate broker, separate everything, because I'll have the same temptation of, but the chart looks like it, I should time it. But then
right.
you break your own rules. So I try to just let that go on the side, grow it up in your retirement accounts, and then you do your trading in your active accounts. And the covered call is a good balance for me to be an investor. Because sometimes we'll be in the stock for 5, 6, 7, 8 months. Sometimes we'll be in it for a year.
Oh, wow.
Never
Okay.
gets called away, and we just keep collecting that weekly paycheck.
It's beautiful. Beautiful. All right. So tell me about your day trading strategy. What's your favorite day trading strategy?
I trade gaps, so stocks that are gapping up or down that day, and I'm looking for basically it's very simple opening range breakouts. Very simple technical analysis, breakout patterns, 3-bar consolidations where stock opens up, it's gapping up, it's clearing resistance, and then let's say puts in a nice big green candle to open on a 1-minute chart, and then it's got a bunch of consolidation candles that have not taken out the first candle's high. Then my entry is over the high, stop is under the low of the day, and I typically
Okay.
for 1-to-1.
So you're not trading the fade.
No,
You're not fading it. So you're trading the second breakout, I guess. So it
Yeah.
gaps open, then it kind of goes sideways, maybe drifts down a little, or definitely drifts down a little.
Right.
Right.
Yeah, my first
And
trade.
then when it starts to go again, that's when you're
Yeah, my first trade would be like 9:35, 9:33 typically. Never at 9:30.
okay.
First 2-3 minutes, I let them do the thing because that's what lets me know, okay, what's my stop going to be. So I don't want to jump in right off the open. So I always wait typically 3 to.
Do you include the pre-market data in terms of the chart pattern?
I
Or no?
personally
Look for
don't.
that gap.
No,
Okay.
I personally don't. But my partner, my mentor, he looks at pre-market charts. A lot of people in our community do. I think there's a benefit to it. The reason I don't use it is because it's kind of, I'm at a position where I'm like, okay, it's already been working for 15 years. I don't want to change anything. I don't want to add a new variable.
Right. Yeah. Of course.
Yeah. So I think that's kind of the thing. But yeah, I just look at in the morning at 9 o'clock, I look at where it's gapping to, right? Where it's going to typically open. And then where does it have the next room to go to? And also the size of the gap. If it's gapping up too big, too much, or if the prior days were all 3 days up in a row and then it gaps up, then I'm not really interested in it long.
Yeah.
That's a profit
good place
taker.
to sell it, actually.
Yeah. So that'll be a profit taking.
A fourth day gap is like usually a climax type run.
Yeah. So we call that like feed the ducks, when everybody else wants to buy it, we try to sell it, feed the ducks. Ducks are quacking, feed them.
I love it. What so what do you do if a stock gaps up with the first 3 candles? It just keeps going.
If it just goes without any pattern, then I just said what a great saint up in the mountains of Himalayas used to say. Her name is Ariana Grande. She had a song, "Thank You Next," right? So it's just like next, move on. Like I don't want to have any regret or FOMO or chase a trade. Cardinal sort of trading. So if I miss it, it's gone for me. Next stock, let's scan and let's find something else.
Beautiful. What chart patterns do you look for these breakouts? What you call breakouts? What do you call breakout? Is there a specific patterns you're looking for, like an all-time high, cup and handle?
So we're looking at, so once let's say we have a daily chart gapping up above resistance, right? So example of, I guess, today would be I shorted a stock called Path in the morning. So it gapped down. It was already extended like 6 days up in a row, and then it gapped down under the prior day's low. So in the morning, it kind of went down and created like a bear flag pattern, right? Dropped in the morning, rallied back into the VWAP, and then right at the VWAP, we shorted it with the stock at the high of the day. And then it did a bear flag and it rolled over and dropped again. And then we got out for just about 1.5 to 1 risk reward rate.
Okay. Nice. So risk to reward ratio. You're using R?
Yes, we're using
when you're
R
trading?
R multiples, and used to look for 2 to 3 Rs on every day trade. Recently, I've been a 1 R trader because I've looked at my data and I had a pretty high win rate of 1-to-1, whereas with 2-to-1, it'll be roughly the same profit at the end of the month, but the win rate would be like way lower. Like if on a 1-to-1 batting 80%, but on a 2-to-1 I was batting 55, 60%. So by that ratio, I said it feels better for my psychology to win more, even though the result is going to be the same at the end of the month. So I've been doing more 1-to-1 recently in this environment.
Interesting. Trading psychology, you mentioned just now your win rate. So tell me how those two come together psychologically.
Yeah, so I mean, I actually book that came out, Mastering the Trader Within. So in that, like I talk about, like you don't want to. A lot of people focus on the win rate. Win rate on its own is meaningless, right? Because you could have a 90% win rate, but that one loser that takes away all the winners.
Take your whole account out.
Yeah, and people do that all the time. Like Reddit is a graveyard of hopes and dreams. You can scour that, and you'll see all the people who lose a lot of money. So win rate on its own is meaningless. And then profit and loss ratio on its own is also meaningless, because if you have a high profit loss ratio, but it's only hitting 5% of the time, the math is not going to work. So we need expectancy. Expectancy, you can go on Google, type in positive expectancy calculator, input your win or loss ratio, input your batting average, and that'll give you expectancy. Now, as long as that expectancy is a positive number, then that shows you that if you take 100 trades, at the end, you're going to come out positive, right? If the expectancy is negative, well, you have a losing system. Don't even execute on that system anymore.
Right. Right.
It's just going to be, and that's what casinos use, right? You go to a casino, you win $1 million. They're not going to mind. They're going to be like, here's some free drinks. Here's a free stay. Here's a,
Yeah.
keep playing, because they know at the end of 100 spins, this is their expectancy and they're going to win. So we're
Right.
trying to trade based on data, not really based on, I love this stock or I feel it's going to do this. It's all patterns that we've tested, and we're just trying to have a positive expectancy at the end of a sample size.
And what does that positive expectancy do for you up here?
That I know that my system works, and that my job as a trader is not to deviate from it, not to use my own brain, not to deviate from any of that, is just to be robotic, indifference, and just execute on that. Because I know at the end of I might have a losing day, could even have a losing week here and there, but at the end of the month, the system literally always makes money. So I do that every month consistently, and that gives you a sense of confidence in yourself, and that eliminates all the need of the fears, the regrets, the FOMO, or, oh, I should have held it longer. No, you shouldn't have held it. You should have just held it as per your trading plan said you should hold it, right? It doesn't matter how much higher it went after I sold it. Like, I got what I
Right.
needed from that, and then you execute on the system. So we're just trying to be the casino that will have a point, something edge at the end of like 100 trades. Then I know that if I keep following that, I'm going to be profitable.
Okay. Do you automate any of this, or are you doing it all manually?
Yeah, we automate that. In fact, this month, next week, we're coming out with our new software. It's an automation software that we program
Right.
everything into. And that is going to
Awesome.
use AI, where it's going to tell you, it's going to analyze all your trades, and it's going to tell you, hey, if you just did, it'll calculate like 57,000 samples, and it'll look at, hey, if you just did 1.3 to 1, when the stock goes 1 to 1, you start trailing a 5-minute bar by bar, that would have made you more money over the last 200 trades. So we'll do it. The
Wow.
software was doing the work, and I'm really excited about that, because that's
That
stuff
sounds
that I would
awesome.
do
And
manually.
what does it plug into? What trading platform?
Right now, it only works with Interactive Brokers and TradeStation, but we will be
Okay.
adding Thinkorswim. Will be the next one we're going to be add support for.
Wow. Okay. Do you ever think of doing like TradingView, since it's a little more broker agnostic?
TradingView, but wouldn't TradingView need to be connected like to a broker?
Yeah, of course.
Yeah, yeah, I don't think that would work, because we send the orders directly on Interactive Brokers. We use Trader Workstation, so they have their API. So when you trade with the software will send the trade to IBKR. So we're not storing anything on our end, or we don't
Okay.
have access to anybody's data. It's locally executed. So with TradingView, there's a complexity of TradingView connects to IBKR, and then IBKR doesn't have the API that will give it to the software. So I don't think that's going to work now, but in the future, we
Okay.
might add it, because I use TradingView for my charting, and that would be great to have there too.
Ah, okay. So you're using TradingView for your charting.
Yeah, TradingView for charting
And-
and Interactive Brokers for trading.
Okay. So you have like a separate execution panel
Yeah.
open on the same screen.
Yeah, on my main screen, I'll have all the charts, and on my laptop over here will be my Interactive Brokers. And then the
Right.
Flow software that we're working on will be just minimized. Because once that's there, you don't need to have even Interactive Brokers open, because it has
Right.
dashboard will show you all the details.
Cool. Awesome. Awesome. So tell us where people can find you. You have really cool strategies. You've explained them very, very well. Tell us where people say, oh, I want to learn more about this guy right now. Where do they go?
Well, first thing I would say, go grab the book. It's on Amazon, Barnes and Nobles, wherever you buy your books. That'll be a great foundation, because
Is that place still in business?
Barnes and Nobles, yeah.
Yeah.
I don't
Okay.
really sell anything on Barnes and Nobles. I think
Okay.
99.9% sales are Amazon,
Sure.
or Audible or stuff like that. But the book, the reason I mentioned that first is because, like, people come with the allure of money, wanting to learn trading. But if you haven't mastered this, forget it. No strategy is going to work. There's nothing I can teach you, because you're only as good as your ability to execute on what you're being taught. So mastering that is number one. And then once you've done that, then you could go to my website, livetraders.com. And that's where you'll find all the information and all the stuff that we offer and learn with.
That's awesome, man. That's awesome. Tell me about your favorite client success story. Like somebody who came to you, they didn't know anything,
Yeah, I think
and now crushing it.
there's a lot of them. But recently, a guy in my mastermind group, so he started doing one-on-one coaching with me last year in January. So we're coming up to 1 year of coaching. So when he came up, he was like a trader who had good results, but it'll be the emotional traps of consistently making money week to week, and then one momentary lapse of judgment where you're just not thinking clearly and you get 20 contracts. I want to add more contracts, and now you're giving it back. So that was his story of consistent wins and then boom, giving it all back. Consistent win, and it just repeated itself over and over and over again. So after working on the psychology aspect, because I think a lot of people ignore the work that really needs to go on once you start trading some size, is that you have to master that. So we worked on his risk management, we worked on his plan, we worked on his the discipline, execution, accountability structures, created all of that. And now he's at a point where he's just consistently, he actually made more money than I did this year, which is great, and I'm feeling competitive now, but he's like, he made more money than I did. And all of the results are publicly shown in our Discord because people connect their accounts and can see the leaderboard, what people are doing. And he is crushing it. But one of the things that changed for him was a mindset shift where he wanted to be a day trader. So he wanted to be a successful day trader, but he had enough money in his account to not even need to do that. Right. So we worked out a way where he can swing trade and do the covered calls, and he'll still end up making more money than he would be actively day trading. So the key with that is not to, dissuade people from day trading, is just to say everybody has their own unique gifts. Some people make great day traders. I would make a horrible long-term investor, right? So then I'll do more short-term trading. But some people are way better doing covered calls because they don't have to watch the stock every day, only Monday to Friday to collect the premium. That is easier on a lot of people's psychology. So don't make it hard on yourself that you have to make money from one style, right? There's many different styles of trading. So find the unique style to you. And that's what he did. And that's what changed for him.
Interesting. That's so awesome. So you mentioned your book. Show us the book one more time.
Right here, Mastering the Trader Within.
Mastering the Trader Within, a mindset for success.
Yep.
And you mentioned like 5 different items when you talked about, you said expectancy, consistency. What were the other ones?
So positive expectancy, consistency, you're going to need your batting average, win-loss ratio, Sharpe ratio, what's your average drawdown. Like there's a lot more things that go into it.
So for you, trading mindset and trading psychology is a lot of statistics in there. There's a lot of seeing what your batting average is and then making the tweaks to adjust it.
Yeah, and we back test. Our back tests are very in-depth because I don't want to take chances with my account. So we back test even stuff like, when I trade from 9 till 11, I make a lot of money. But when I trade from 2 to 3 p.m., I end up not doing that great. So let's cut that out. Let's focus on 9 to 11. And then I notice I'm really good when I day trade stocks $50 to $100 a share. But when I trade lower price stocks or when I trade stocks over $500 a share, my results are not that great. Okay, so now let's cut out that fat, focus on 50 to 100. I'm really good when my stop loss size is about 75 cents. But when I give them a big stop loss, I just don't get them to go 1-to-1. So like we're looking at minuscule data to make small tweaks, and those small tweaks really add up to increase your win rate and your batting average. So all the decisions are data-based. Back testing is like our number one thing that we talk about more than technicals or anything else.
Very interesting. Very interesting. So step 1, get the book. Step 2, go to livetraders.com.
Yep. Step 2, and then step 3, check out our
You also have YouTube channel, which is also Live Traders.
Yeah, Live Traders YouTube channel. There's hours and hours of lectures on there. You don't need to buy any of our trainings. Literally, if you go through the videos, everything's there. You just piece it together.
That is awesome. Anmol, thank you so much for coming out today. This was very, very interesting. I want to talk to you more, especially about the covered calls and the cash secured puts. But maybe we'll do that on the next call that we do. But I really appreciate you coming out today, and we'll talk again soon.
Thanks for having me. It's great chatting with you.